Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to make this video and release it probably early. So this video will be covering what to do in a bear market. I'm going to be covering the three major indexes, how they've been for the year. As you know, it's been a bloody mess. Thursday, Friday, we were down nearly 3% across the indexes. Going into Monday, we lost an additional 4 to 5%. Making two of our indexes in the negative for the year. One of them still hanging on by a thread. And so we will be covering the three indexes and taking a look at four options you guys can consider right now going into what is looking like a short-term bear market. So right now, what to do in a bear market, short-term bear market. So right now the bear has taken the lead for the short term. So right now it's kind of undecided. Will the bear react? Will the bull react? We've been in a bull market since back in 2008, 2009. May 2008 recession happened. We recovered within a year or two. A lot of the stocks did recover very nicely. We've been on a long run. The last time the markets have fallen like this was back in 2013, where we lost around 5 to 6%. So this happens, it's been a while since it's happened, nearly 5 years. So here we have all three of the major indexes. S&P 500 up at the left, down now year to date by 0.92%. 5-day change negative 7.17%. Now that hurts. Dow Jones now down 1.51% year to date. 5-day change negative 7.92%. And the NASDAQ still positive for the year by 0.93%. 5-day change is negative 6.68%. So as you know, your loss, when you lose 5%, it takes you gaining 10% to get back to where you originally were. So if you lost 7% this week and within 5 days, it's going to take you roughly 14% to get that money back. Now, you should have had a plan going into the investing, going into the stock market. So this is the very first thing I will be talking about. What was your initial plan? What was your plan for the short term, for the long term? My plan still, I've altered my plan a little bit for the long term. As you know, for the long term in the past, I was well invested over the last 5+ years. I had stocks, I have bonds, I have a variety of other items, my Roth IRA, my thrift savings plan, my 401k. So I'm still well invested and will continue to invest. But I have made other plans, which goes into, do you have other plans? Are you planning on buying any real estate? Are you planning on moving, jumping, taking a vacation? There's all sorts of plans that can come up for the short term. So my plan recently changed, kind of going into end of 2017-18. I had begun looking at real estate. I really wanted to turn my attention and begin buying some rentals. I'm looking to buy another house and move there, rent out my current one, or if my offer gets denied, I will instead take that time and buy one or two smaller level rentals in order to create some cash flow outside of dividends. So that was my plan going in 2018, was I wanted to at least buy an additional house, rent out my current house underneath an LLC, or buy two additional rentals and own those underneath an LLC. So that's still my plan for 2018. I would like to buy one rental or buy another house and rent my current one out. So that did change my long-term goal, is to get into real estate. So how much time until you retire? Now I'm 32. I still have quite a while until the retirement age of around 60, 59 and a half. And I would like to retire before then. So I'm working to create cash flow. I would like to get into real estate for that. So I have quite a while until I really need to retire, but I would love to retire much earlier, and that's why I'm trying to speed up the process by withdrawing out of the stock market a little bit and instead focusing on real estate, where I can have some tax advantages. Option number one that you guys can consider is to hold on to everything you have inside your portfolio, whether it's positive or negative, and wait out the storm. The stock market does go through corrections. It does go through recessions. You can lose 5%, you can lose 10, 20, 30% in a single day, and it will recover over the long term. So holding on to your positions for the long term is going to work out as long as you're invested well in blue chip, solid companies. A few of them out there that have been through multiple recessions: Procter and Gamble, Amazon. Amazon was around during the last one, yes. Amazon, Google, Apple, Johnson and Johnson. There's so many stocks out there that have been through recessions. They've made it out well under 2 years, and as long as you bought and held that stock, you would have never lost any money, because you never lose money until you sell a stock. Option number 2, now you can sell all or part of your winners for the money in order to use it for averaging down on other positions. So I have the red and the green up the top because this is not a negative or a positive move. In my current situation, I'm not looking to add any more money into the stock market, so I don't have any money in order to average down on some of my positions that I'm down on. So I will be using option number 2, where I have begun to sell some of my winners. I'm only selling my winners that I feel have, they've gained quite a bit. AbbVie, Costco, Lowe's, a lot of those stocks are up 30 to 70%. So I'm using that money by selling that position in order to invest in some of my lower tiered positions where I'm down on, and also be taking a little bit of money off the market in order to kind of wait it out and begin investing in real estate, such as I've kind of been focusing my plan on for the long term. So that's option number 2. Option number 3 is you can begin to short the market. Now there are a couple ways you can do this, and I have one of the examples here. Now, so if you think the stock market is going to go down, you do have a few options. You can begin to short stocks or exchange traded funds. You can also buy put options, or one of the best options that I've actually found is to buy these inverse equity ETFs. So as you notice, the S&P 500 went down 4.8%, somewhere in that time frame here. So you can see 4.10. So these inverse ETFs, they double the reverse of what the indexes do. So if the S&P 500 went down 4.4%, this went up 8.15%. Same with the Dow Jones. This went up 9.18%, and this one went up 7.6%. So here you can see the indexes are SDS for the S&P 500. The Dow Jones Inverse Equity is DXD, and the NASDAQ is QID. Now, I do not recommend you hold these through the night because you don't know what the market will do in the following day, and these do double whatever the major indexes do. So if the major index goes up 4%, these will go down 8%. If the major index goes down 2%, these will go up 4%. So if you know the market's going to be on a downwards trend during a day, you can use these to short ETFs in order to inverse your loss from your other investments. So that's one option that I'm considering now that I have some cash on hand. By selling some of my winners, I will probably more than likely short the S&P 500 just because I do currently hold VU inside my Roth IRA. I have sold some of my Roth, my VU and my other position in order to use some of the funds in order to short it, possibly for the short term, in order to build back some of the losses that I've captured over the short term. And then I'll reinvest when the market kind of corrects itself. It begins to move on its way back up into the main indexes that I'm still invested in for the long term. Option number 4 is you can begin to funnel more money into your account and use this money to average down on your positions. This isn't an option I've considered because I don't have money I want to invest into the stock market. I'm actually have been looking to pull a little bit of money out of the stock market in order to buy rental properties or another house. So this could be one of your options that you could use. If you do have some additional money on hand, you can funnel it back into the market, add into positions that you feel are down and actually valued, but the price is down. So I've actually included a lot of pictures here. You can see the 3 major indexes, and option number 2, buying or selling, it's neither negative or positive. So Option number 4 is if the value of the company have not changed but the price has decreased, such as Procter and Gamble. That was one of the videos. I just made a video with 5 dividend aristocrats that have paid out and increased dividends for 25 years or more that are currently down with a yield over price. You could begin using that money to buy value blue chip companies that are currently down in the price. And of course, over the long term, this always equals success because the S&P 500, a lot of these big blue chip companies, they always rebound over the next 1 to 2 years, and they've also been paying you dividends, and you'll make it out in the end positive whether you've lost for the short term. So that is basically it. Again, option number 1, hold on to everything you have, whether it's negative or positive, and just kind of wait out the storm. With time, everything will fix itself. Option number 2, sell all or part of your positions in your winners only, because you never lose any money inside of your losers until you sell, and use the money from your winners in order to average down on your other positions that are currently at a loss or that you feel could be very beneficial to your portfolio that you haven't held before. And option number 3, use some of these inverse ETFs in order, if you see the S&P 500 is making its way down again, possibly at another 3-4% loss, by buying the ticker symbol SDS, you could increase yourself by nearly 4 to 6% in a day. But again, do not hold these over the night because you don't know what the stock market will do in the following day. It's very risky to hold these because whatever the S&P 500 or the indexes do, these do the opposite at double the rate. Option number 4, add more money into your account and use this time to average down on companies you believe are at a great value in comparison to their price. Now, none of these options are, there's no better option. It's all up to, again, your plan. What was your initial plan? My plan recently changed. I want to get in the real estate, so I'm invoking a few different options that I've considered these, and I will be acting upon those actions. So that is it for this video. If you guys are, if you did enjoy this video, hit the like button below. If you are brand new to my channel, remember to hit the subscribe button for future financial videos. If you have any questions or want to say hello, or you have other options that you're actually considering, leave them in the comments below. I love to read your guys' comments. And of course, as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them and, help stop some losses. If you're able to see that the stock market will continue on a downwards trend, why not short the stock market? Why not short an ETF? So use these. These are very risky to use. So just be careful because they do, again, double whatever the major indexes do. So that is it for this video. Thank you guys for watching, and I will see you next time. Have a great day.